Next slide, please. We'd like to welcome you to the SCORE webinar this morning, and we are going to share with you a few facts about SCORE. Next. What is SCORE? SCORE is the largest network of volunteers in small business and mentorship in the nation. No matter what stage your business is in, we are here to help you from the beginning to the end of your business for the life of your business. You can easily request a mentor to help you start, grow, or transition your business today or in the future. Next, please. Back one. Okay. Next. Okay, our mission and values. SCORE's mission is to foster vibrant small business communities through their mentoring and education through the process of your business. We aim to give every person the support they need to strive as a small business owner. Small businesses drive our national economy through business formation, job creation, and wealth building. Small businesses are critical, vibrant communities in our society. Next. This is an overview of our national volunteers. We have over 10,000 in the United States, serving clients in over 1,500 communities. Next. As a SCORE mentor, we are required yearly to review our code of ethics for our mentorship, and SCORE members are not permitted to take money in any way from clients, meaning our services are strictly voluntarily. Volunteers may not use our client or member database for commercial reasons, meaning that we will never use or share your information. And all client information is confidential and protected by the U.S. government. Next. Okay. SCORE is a partner with the SBA. Through the SBA, we are able to deliver all mentoring services at no charge to individuals. Because our work is supported by the U.S. Small Business Administration and a few generous supporters, and thanks to our network of over 10,000 volunteers. And locally, our SCORE initiatives are supported by a number of local foundations and banks in the community. Next. Okay. In order to receive additional information, you can visit our SCORE websites by using the Q code that's displayed on the screen, or you can log into score.org to find a mentor or become a volunteer. Before we go into the presentation this morning, I would like to ask that you place any questions that you have into the Q&A. We will monitor those and ask the participants to answer those questions. As participants this morning, we have two bankers and an individual from the SBA. Mark Hansel is going to be our moderator, and he will introduce himself and the participants. Mark is a previous SBA lender relations specialist and now a SCORE mentor. Next slide, Gwen. Okay, just another image of the SBA. And at that, I'm going to turn it over to Mark so that we can get started with the webinar. Thank you very much for your participation. And don't forget questions and Q&A. Thank you.
Thank you, Vera. This is Mark Hansel. I'm a SCORE volunteer with the Canton chapter. And as Vera indicated, I was with the SBA Cleveland District Office for a number of years as a lender relations specialist. And over those years, I got to know Tom, who I worked with at the SBA, Nathan at Huntington National Bank, and Sean at Consumers Bank. And I just want to say a word or two of thanks to them for participating, taking their time. and sharing their expertise here. Now, Sean is with Consumers National Bank based in Minerva. They're a great community bank. SBA has recognized them, given them awards over the years. Huntington National Bank is a large national producer, one of the tops in producing SBA loans. And both consumers and Huntington have what's called delegated authority, which means the SBA trusts them to make good decisions. Consequently, they can turn around an SBA deal right away. So, with that, we're going to let Sean, Nathan, and Tom introduce themselves, and then Tom has a little PowerPoint presentation. Nathan, you want to introduce yourself?
Sure. My name's Nathan Sable. I'm a SBA product specialist with Huntington Bank. Been with the bank for over 15 years. Been in banking over 20. Been specializing in the SBA program for going on 7 or 8 years now. So it's kind of really a niche that I enjoy working in. My family had small businesses growing up. I grew up working in them. That's kind of how I connected my business banking world to SBA since I got into banking. It's been a niche. I enjoy it. I love helping people out.
Sean?
Yeah, good morning. Sean Ulick with Consumers National Bank. I've been with Consumers for over 12 years now. I'm their Canton market manager, and I head up all of their government financing. That kind of came about during COVID and PPP. So always have dealt with the SBA. I've always been an active supporter of utilizing the SBA in the best way possible, and when circumstances arise that it is needed. I've been in banking for over 25 years now. And as Mark said, we are a community bank based in Minerva. We are the largest community bank in Stark County. And we're getting ready to celebrate our 60th year of being around. So look forward to this meeting and giving you any kind of information that we can.
Tom?
Yes, this is Tom Sarek with the SBA, the Ohio District Office. Mark used to be with SBA here, so he's familiar with that. We're actually, going to have one office in Ohio. So I was with the Cleveland District Office. Now it's the Ohio SBA. But, SBA is a federal government agency. It kind of helps people get in business and stay in the business. And I've been here a long time, lender relations specialist, and work with the lenders and SCORE and small business development centers to try to promote small business and help people get funding. So that's about all I have right now.
You want to get started with the slides, Tom?
Yeah, I'll get started with the slides. Can I move them forward, or you can move forward? Okay, so the SBA, Small Business Administration, like I said, we're a federal government agency. Kind of, work, to ignite change, spark action. So basically, the federal government is trying to help people start, grow, expand, and recover. And we can go over that, the next slide there. So what SBA does, our core functions, we have 4 core functions here. Counseling is a big one. That's why we need our SCORE mentorship, SCORE, to handle the counseling there. We also have these small business development centers around the country too. They at times work together, SCORE and the small business development centers. So that's our counseling area. For contracting, we try to help link small businesses with federal procurement opportunities. We have these Apex accelerators around the country. There's one in, I think probably the closest one is in Akron there, Stark County, helping people get, kind of the piece of the action. The federal government, buys a lot of things, and we try to link people up, small businesses, to purchase stuff from the federal government. Big area that SBA gets involved in is credit, access to capital programs, own and loan guarantees. This is where we need our lenders, our bankers, like Huntington and Consumers National. They make the loan, you deal with the bank, but in the background, SBA can guarantee that loan, provide that guarantee. Like we're kind of like a co-signer. Because of that, banks able to make more loans that maybe they wouldn't do on their own. Kind of give them that security blanket to do more loans for like startups or maybe businesses that they're a little hesitant to do, but with the SBA guarantee behind them, they're able to take more risk. SBA is, what's that?
Oh, Tom, sorry, Nathan here. I just wanted to chime in on the counseling piece with SCORE and the small business development centers. So as we dive into the rest of the conversation, I think we'll keep hitting on those marks because business plans and projections are so big, particularly with startups, but are also needed in business acquisitions as well.
Right. So that's why we have the counseling. Very important to get your business plan started and questions along the way. And then when you're ready, you go to your friendly banker. Hopefully get that loan there.
So Tom, it's a bank loan before it's an SBA loan?
No, it's basically all the same thing. I mean, it's the bank loan is, guaranteed by SBA, that's
Right. But I mean, the bank has to decide to
right.
do the deal and do it with SBA.
Right. So you actually deal with the bank. You don't come to the SBA. You come to the SBA, we're going to direct you back to the bank. The bank's kind of the center. That's basically their loan. You make payments to them. You deal with them. They do the application process, but then they ask us to guarantee the loan. So we're kind of a guarantor on the back end, but you're always dealing with the bank. SBA also gets involved in surety bonds if you need that. If you're a contractor and you need bonding, we get involved in that. We get involved with small business investment corporations. We have some research grants. So that's for credit. The last thing SBA gets involved in is disaster loans. SBA makes direct loans available in declared disaster areas like, Ohio, it's usually flooding or tornadoes, hurricanes, Florida, whatever. But during COVID, SBA did these economic injury disaster loans, EIDL loans, which maybe some people on the line got those loans. They were kind of 30-year loans. They're still there. So that's we get involved when there's actually disasters too. The next slide. So our resource partner network. So SBA is kind of like an umbrella organization, but then we have these, resource partners all around. We got 1,400 partner offices nationwide. We're talking about SCORE, small business development centers. It can help support advice and guidance. That's where SCORE can help you. That just gives you, if you're not from, the area here, you can go on to sba.gov under local assistance and see a SCORE, small business development center, kind of in your area, because I know a lot of people are online from out of state here. So like there's 1,400 partner offices, nationwide there. Next slide. So what resource partners are right for you? Well, SCORE, actually, Canton SCORE, that's, but we got SCORE chapters all over the place there. You just go on to, www.score.org. So if you're like an aspiring entrepreneur, small business owners looking for mentorship and advice, go to SCORE. They have free online workshops. So they already covered that. So go to the next slide here. We also have these small business development centers all around too. A lot of times the development center and SCORE, work together because they're both, basically, free, for the most part, free business counseling. So you can actually use both, so they also have some low cost training and counseling too. Next slide.
Hey, Tom, let me interrupt. I saw a couple of questions pop up here. One has to do with loans to veterans in the VA. And I don't think the VA Veterans Administration has their own loan program. But we do have something to do with loans to veterans. That was one question. And the other that came up, and Sean and Nathan can address this, has to do with a lady who's interested in buying an existing business. And so if you could offer some words of wisdom along those lines. So, Tom, did you want to talk about the veteran loans?
Yeah, we got, like I said, we have these V box, which I'll have a slide or two down the line. We try to help veterans. We have, kind of, that one right there. We have a Veterans Business Outreach Centers. It's in Flint, Michigan, but online you can do everything nowadays. If you're a veteran or also just a spouse of a veteran too, you can get counseling or transition assistance. You got training and advice. You got a lot of help there from this kind of like Biz Central Veterans Business Outreach Center. They were talking about putting one in Ohio, but like I said, everything's online here, where you can talk to them. You get help and advice, and a lot of times, sometimes we put on Boots to Business, which is kind of an all-day thing to help veterans there. So we do help veterans, and another thing, veterans, SBA has guarantee fees, maybe 2% of the guaranteed portion. Veterans, $500,000 or less, and the SBA Express, there's no SBA guarantee fees, so that's kind of an advantage for military veterans or military spouses, to use their programs.
One thing I want to toss out there for veterans, and it's a good exercise to do when you're preparing for application, just because I've seen it on 2 or 3 applications now. If you're doing any work or you've gone to the VA copays, they've fallen through the cracks. You want to dig into those details, because they'll show up as a delinquency on government debt, which can cause issues with the SBA program and moving through the process. Doesn't stop us, but it's good to get ahead of yourself on any of those items if anything like that's floating out there.
Yeah, Nathan and Sean, did you want to talk about buying a business?
Absolutely. Sean, do you want to go first, or?
Yeah, when you're buying a business, obviously you need to do a lot of due diligence on that business that you're purchasing. I know for us, as Mark said and Tom said, your loan is still predicated on your lender and them being comfortable with it. SBA provides us a level of security and comfort. And when you're buying a business, there's typically a lot of goodwill in the business. And what does that mean? Well, that means that for the bank, there's not a lot of collateral involved. Typically, depending on the business, whether you're buying a building with the business, which is always a great situation to be in, but you want to look at that goodwill number, and then we're going to do our due diligence as far as looking through that, and is it worth it? So if you're looking at buying a business, typically where you're going to start with is I would ask for 3 years of their tax returns, a year-to-date profit and loss balance sheet. And the balance sheet's important because that'll give the bank an idea of where we're going to be at in a security position on this. With that said, SBA does have some rules around buying a business. If you're looking at a seller financing option, typically those have to be on non-repayment terms for the life of your loan with the bank, as well as we're going to look for a business valuation depending on the size of the purchase. With that said, I would also be ready for the discussion of, are you willing to put up some of your personal assets for the loan? Such as if you have equity in your house, in your residence, SBA does require us to take a piece of that depending on what it's worth and how short we are on collateral. Nate?
Right. And Sean, to kind of add on those moving pieces, when you're talking about the SBA program, the banks having their own guidelines. Basically, there's the SBA box of guidelines and the lender's box of guidelines are going to fit within that. So as lenders, we're required to meet those guidelines. For example, on a business acquisition, you have to bring a minimum of 10% equity injection to the table to be SBA eligible. A lot of lenders are going to look for up to 20%. So with that being said, with your question about seller's notes being involved, something we can definitely work with. As a buyer of the business, you're going to have to bring a minimum of 5% cash, regardless of the structure. We can work with a seller's note to get you to 10%. But that's where it's good to bring the lender into the discussion with the sellers a little bit as well, because that 5% seller's note to get to 10% is going to be required to be on full standby for the life of the loan, meaning they can't take any payments. Now, if the lender's looking for 20%, we might look at a separate seller's note to, add additional funds into the deal. There's going to be a little bit more flexibility, underwritten discretion on repayment terms. But as Sean mentioned, most lenders will at least initially put that on full standby for the life of the loan.
Thanks, Sean and Nathan. This is Mark again. In your experience in dealing with business acquisitions, I mean, you've done asset purchases and stock purchases. What are you more comfortable with, an asset purchase or a stock purchase, or does it matter?
It doesn't really matter.
It doesn't really matter. No. We'll do either. So I know Nate does a bunch of them. We've done a bunch of them. So, I mean, that's all going to be dependent on working with your other advisors out there. And always remember, when I say advisor, your banker, Nate, me, whoever, should be one of your advisors as well. A lot of people kind of leave us out, but we're the ones that are providing you with the capital. But when your other advisors, your attorneys, your CPAs, it's all going to be structured based on the seller's accountants, how they want it done, how yours wants it done. So whether it's asset or stock purchase, neither one really affects it.
Yeah, the one difference that you can look at with a stock purchase is a partial buy-in. And that's something years ago the SBA wouldn't allow, but we can look at those now. So say you have a law firm that's selling half the firm to a partner. If they bring 10% to the table, we could finance that 50% stock purchase. But in that instance, that's something where the existing owner has to be mindful of, because they're going to have to guarantee on the debt in some form or fashion as well. So those discussions are big to have.
Vera?
There is a question in chat, and I'm going to answer this, but hopefully the rest of the remainder of the questions will go to Q&A about serial entrepreneurs. Does SBA support serial entrepreneurs? And I assume they mean having multiple businesses.
Yes, we can. Look at that when they have several businesses. Yes, the typical credit guidelines are going to come into play. But big thing with SBA is you have a maximum SBA exposure of $5 million. So if they have SBA loans with their other businesses, them individually, that can come into play to how much we can lend to them, or if they even qualify.
Sean?
I don't have anything to add to what Nate said. So no, that's perfect.
Did we lose Tom's presentation?
There's another question here. Let me see if we can delve into this. Buying a business and the loan requirement. What do you mean by there is no repayment as part of the terms? I don't know.
So when we're mentioning that comes to the seller notes that come into play. So seller notes, basically a loan that you're getting from the seller of the business to yourself. Well, SBA has a document called the SBA standby agreement. So we can have appropriate controls and lien positions over those seller notes. So for existence, that 5% seller note to get to 10% in the example I gave earlier, there's going to be a SBA standby agreement that comes into play that notes this. It essentially, as a borrower, protects you and is a means to meet the guidelines to get the deal done.
Okay.
Okay, well, I can go back to the slides here. There's a slide right before there. There was one right before. Yeah, about the Women's Business Center. We do have this Women's Business Center of Northern Ohio. It's in Cleveland. So, like I said, if you're a woman, if you want, just check out this Women's Business Center. They also have training and counseling and business advice also. Like I said, they're in Cleveland, or they can help you online there. So, and they're right where ECDI is at, like micro lender. So you can go to the next slide, or one covered the VBAC. So basically, how SBA can help when you need funding for your business. We can talk about basically SBA backed loans. We also sometimes have, private investors, awarded funds, surety bonds. Next slide. So if you need a business loan to start or grow, the SBA works with approved lenders like Huntington and Consumers National, but SBA backed loans, the bank makes the loan and competitive terms, lower down payments, flexible overhead, counseling, education. So we try to give you the whole package there. Next slide. So how an SBA backed loan can help you. So you can grow an existing business. You got a business, you want to grow, so you need more funding. That's where, can help you. Somebody's complaining about not complaining, talking about, you see the talking points there. So you can also start or purchase a business. We try to encourage people to, start small business. So like I said, they create a lot of jobs. So SBA definitely wants to, promote small business. That's why we provide the guarantee, starting business or existing business. SBA loan can be used to refinance high rate debt, which is, if they're talking about interest rates being lowered here, then people probably want to refinance more, coming up here in the future here. If rates go down here, everybody wants the lowest rate if they can get there. And, the bankers will help you refinance your debt if it makes sense there. You got to have at least a 10% cash flow improvement.
Tom, can I chime in on that real quick? So, one of the biggest reasons you see a refinance of debt, and SBA rates might not always be the most favorable, so to speak, but where the advantage comes into play is we do longer loan terms with the SBA, which that's how we help get to that at least 10% improvement on your current debt repayments. And if we're looking at a certain refinance situation that's including real estate, depending on the percentage of the real estate we're refinancing, that could allow us to go longer terms than 10 years, possibly up to 25 years if at least 25% of the 50% of the 51% of the real estate is being financed.
Okay, so that's, if you need that, the bank can help you do that. Also, SBA loan can be used to, if you need a revolving line of credit. You might have a term loan, then you need a revolving line of credit for kind of day-to-day expenses, And if purchase, renovate, or expand facilities, that's a perfect SBA loan situation. Purchase inventory, equipment, or machinery, purchase land or real estate. But the land or real estate, has to be used for your own business, not to lease out to somebody else. Has to be, mostly for your own business, at least 51%. If you buy real estate, and new construction starts at 60%, you have to use for your own business. And also, SBA tries to promote exporting, so you can export a product or service. Next slide.
Hey, Tom, let me jump in here. There are a couple of questions in the chat. Number one, I see that Nathan put his contact information in the chat. Sean, if you could go ahead and do that, and Tom, do likewise. The one question is fairly complex, deals with a liquor license and setting up a temporary company to hold that. And I think that probably deserves an email to one of you and maybe a response. With regard to the state of Ohio, I don't think we can lien a liquor license, and I'll let you respond to that, Nathan and Sean. And then secondly, there's a question concerning microloans. Now, SBA is an agency, has awarded money to certain not-for-profits, and the micro lender here in Ohio is called ECDI. Now, they are not a bank. They do make loans directly, but that's a different animal from what we normally have under the loan guarantee program. Nate, Sean, did you want to say anything about liquor licenses?
I can say I have not taken a liquor license as part of a collateral. They do have quite some value, though, depending on the business and what they're using it for. I feel like the question was, are you able to set up that separate entity? Is that the real question here?
I think it could be.
To hold the liquor license? Yeah, you could set that up, and they can be a co-borrower on your SBA deal. If they're going to be holding the liquor license, that's going to generate revenue for the loan. Now, I saw this question. I think another part of it was they're actually setting up a contract with the current owner of the liquor license, almost like they were going to have like a management company. Is that the case?
Don't know, Sean. Maybe they'll
Well,
respond.
it's my point on that is any current owner that's in the business now would need to exit the business completely within a year. That's an SBA requirement. They cannot stay on for any more than a year in any kind of role with that business. So maybe that would help answer that question if that is the case.
Well, I mean, some of the things I've run into when it came to the liquor license, like an acquisition scenario, I've seen people take the approach of doing a stock purchase because the liquor license is going to follow on with the company. Uh, in that case, a lot of deals are done via asset purchase. I know they have to go through an application portion, at least in Ohio, to be able to get that liquor license. Bottom line, when it comes to licenses to the business, they're integral to the revenues and the operations of the business. They need to have something in place in order to be able to close the loan.
Okay, there's a question about an out-of-state compliance offer, discussing a management agreement. Let's see if I can get this question.
I think that might relate to the liquor license issue.
Oh, you think?
I
Okay.
believe so.
Yes, okay, I see. Okay, so we've answered that one. Okay. Okay.
Tom,
Oh,
Tom, you want to
oh
proceed?
yeah. Go to the next slide there. So we're going to talk about the SBA loan programs. We have various SBA loan programs under kind of umbrella program. It's called the 7A. Congress named it 7A a long time ago. That's why it's called 7A. It's a loan guarantee program. It provides eligible lenders with extra support on loans to make small business loans. Like I said, it is very popular. Banks, credit unions, and even some non-for-profits use the SBA 7A loan program. So like I said, this is one where, pretty much most of the banks do SBA loans. Some banks do a lot more than others, like Huntington and Consumers do a lot of SBA loans. And then we have this SBA 504 loan program. This is where we need a certified development company involved that actually puts together the deal, where we still need a bank involved. That certified development company kind of uses the bank and SBA, provides financing for real estate and equipment in partnership with the bank. SBA bank takes the first 50% of the loan. SBA, sells a bond debenture for generally the last 40%. And the SBA portion is actually a fixed rate, which is, could be 10, 20 years, and it's like 6% lower than the prime rate on the SBA portion of the 504 loans. And these certified development companies are all around. There's Cascade Capital in Akron. There's Gross Capital in Cleveland, basically all around the country here. Another loan program that we have is called microloans. This is where you're not quite bankable. You go to the bank and they say, you're not ready to get a loan for various reasons, maybe the credit, maybe certain things, you can maybe get an SBA microloan, provide small amounts of working capital for businesses that cannot access traditional financing. Rates and terms are consistent. Basically, you can get the loan. We got this ECDI, which covers the state of Ohio, that does these microloans in Ohio here. So the funds are designated through designated microlenders. You can use them for working capital equipment and leasehold improvements. I don't know if the next slide covers more information there. Well, like I said, ECDI is kind of our microlender. If you're ready to consider federal contracting, that's where SBA gets involved in that also. We have these Apex accelerators all around the country. There's one in Akron there that help you get hooked up with selling to the federal government. Or government wants to buy things and you can sell to them. So if you're ready for that, SBA can get involved in that too. Next slide. So in the federal contracts, there's certifications under our contracting program. We have the 8A. We have the Hub Zone program. We got the Women's Owned Business program, Service Disabled Small Business programs. So if you're certified, you get a certification here. You kind of like they kind of help set aside government sets aside money to help these different programs, be able to, get involved with this. So next slide there. So this is talking about the Apex accelerators. Can determine if your business is ready for federal contracting. Can help you register and see if you're eligible. We have these Apex accelerators. This is the one in Cleveland. Don's Vesky in Cleveland here, but there's one in Akron. They're all around the country. In our local office, we have Vanessa. They can help you with that too. So it's kind of a good way for a business to expand your business and get involved in government contracting. That's where this Apex accelerators, which is free, that can help you see if you want to get involved with federal contracting. Next slide. And SBA also can help you go global. I mean, we got it's a big world there, and we got these export assistance centers. We got these small business development centers specialized in exporting that can help you get involved, export your goods and services. You got a company there, you want to sell to Canada, Mexico, around the world. They'll help you get hooked up with this. You get counseling and training, you can find buyers internationally, you can got special programs for exporting, get export funding through our Export Express loans, export working capital loans, international trade loans. So SBA, we're trying to, help people not just sell in this country and other countries also. So next slide.
Hey, Tom, let me interrupt at this point. There are a couple of questions in the Q&A or chat concerning microloans. And yeah, I mean, microloans, I think they generally top out at $50,000. But if you're in Ohio, you want to get in touch with a group called ECDI and find out more about that program.
Right.
Yeah, and then getting back with Nathan and Sean, you've got the regular loan guarantee program that tops out at $5 million, and then you've got 504, and 504 in its own right can go up to $5 million, and the project can be much larger, 15 or 20 million, what have you. You want to kind of react or talk about 504 and where you might use that?
Well, Sean, you go ahead.
Okay. And I think another point, and correct me if I'm wrong, but your 5 million includes any 504 portion you have out there as well. They'll cap you as part of it. The 504, I think, is a great program. It provides you with the flexibility If you're buying real estate, and you can include some of the equipment in there. If you have equipment in there, it's a shop, or right now I'm working with a fitness center. Some of their project is going to be building a new building, as well as they would need some additional equipment to put in there. But what they help do is, with the 504, you're going to get basically 2 loans from your bank. So consumers or Huntington would provide you with a 50% loan of the project, and typically up to 40% of the loan of the project. So in other words, you'd be needing to bring in 10% down. Depending, though, it could be 15% or 20%, depending on what kind of building we're looking at. I mean, you can do storage units through the 504 program, and they require a little bit more equity on those. The benefit of it is, when your project's done or after the purchase is done, the 504, the CDC, Mark had mentioned Growth Capital and Cascade. Those are two that we work with quite a bit around here in this market. They come in, what they do is they buy the debenture, it's called, and that's your 40%. And that gets fixed in, and that can go up to 25 years, and you're fixed in a very favorable rate on that. The other 50% of that deal is going to stay with either myself or someone like Nate at Huntington, and it stays on our book as a traditional loan. The benefit of that for us as a bank is we're only exposed by 50%. The SBA has taken out the other 40% with the 504. So you're in a better position as far as the bank is concerned. And quite honestly, I feel like the client's in a great position, because they're going to get a great rate that's locked out there for, again, up to 25 years, depending on the project.
Yeah, and I just want to note that inside the chat, I dropped a flyer that kind of breaks down the difference between real estate transactions from a conventional to a 7A loan to a SBA 504 loan. One thing to note when you're looking at 504 versus 7A, 504, like Sean mentioned, primarily real estate and large equipment purchases. Every bank's going to treat the programs differently, because you could have a deal that's totally eligible in the 504 program. Some lenders might not want to entertain it for one reason or another. They might opt for a 7A structure. Sometimes you can even combo the programs together, though. For instance, I'm looking at a large transaction. It's somewhere in the ballpark of 8 million, which is above the exposure. We're looking at breaking the real estate portion from the soft cost portion of the deal, splitting them apart. So, because the SBA 7A program comes with the 75% guarantee, and the 504 comes with that 40% guarantee. So that essentially gives you more dollars to lend against. So that $5 million cap is kind of an example of the cap lending amount in the 7A program. So if you have these split up, the ratios, the numbers are going to be a little bit different.
Thanks.
There is
Tom,
another question.
Okay, go ahead, Vera.
There's another question in the chat that asks, who can set up an LLC and registration with the state? And I think that's a simple SCORE mentor answer that anyone can. If you go to, I think it's Secretary of State.gov, Ohio Secretary of State.gov, you'll see the application for acquiring your EIN. That's what that gives you. But you'll need to know that you want that LLC structure before going there. And there's a slight fee, but I think it's done all online now. Any other comments from other?
Yeah, just the note on that, say you're looking at a business startup or a business acquisition, at least at Huntington, when we're looking to underwrite, you don't necessarily need to have that LLC or tax ID established. So we can get you through the underwriting process without it. When we're working on conditions to close, that's the time to put those entities in place. Never hurts to have them done ahead of time. We're not going to complain about it, but for your purposes, we can do that later on in the process.
Well, I can get back to the end of the slides here. So if you're looking to go global in international trade, we do have these export assistance networks around here. We have this one at Cleveland State University here, and like I said, they can do a lot of things online too. There's a Nate Ward director. There's also U.S. Commercial Service Northern Ohio. So if you want to get involved in that, we got help for that. Next slide. So just one last slide here about recovery. Like I said, if there is a disaster like in Ohio, like I said, it's usually flooding or tornadoes, and there's hurricanes around the country. And also during COVID, was considered disastrous. We can do these loans for, help small business, and also programs that help homeowners too. If they have, disaster, like their home gets damaged during one of these, hurricanes or floods or something like that. Physical damage loans, you got mitigation assistance, economic disaster loans, which we did during COVID. Basically, I think there was like $400 billion that we made these economic injury disaster loans to help, small businesses, and also military reservist loans. So basically, that's another thing SB gets involved in, when there is like a disaster out there. So that's all the slides I got. I don't know,
Yeah, Tom, thanks. And we do have some more questions here. One of the questions has to do with personal credit and obtaining business financing. Nathan, Sean, you want to chime in on the issue of personal credit?
Personal credit's very important. It's one of the biggest things we look at. You are the business as the individual, and so we do look at your individual credit scores, your repayment history. Part of your package that you're going to want to provide your bank will be your individual tax returns as well, along with what we call a personal financial statement, going through and seeing what kind of assets you have out there. Do you have the liquidity to put down on the business? And quite honestly, we look at the debt service coverage ratios on a business, but we also look at what we call a global, where we're going to take into account all of your personal payments you have, what your income is, what the business is going to generate, and combine all of that together with the proposed business debt and see where you sit. So, yeah, personal credit is very important in the process.
Yeah, and here at Huntington, when we're looking at personal credit, the guarantors would have to have a personal credit score of 680 or above to qualify. So if you're below 680, it's something to work on. Something to keep in mind when you're talking personal credit. Also, when it comes to investors, is SBA requires any owner of the business that has 20% or more ownership in the business has to guarantee on the loan. So a couple situations when you're bringing things together, maybe you have a partner that's going to be involved that's a little weaker on the credit side, but is going to be integral to running the business in a sense. Maybe they have less than 20% ownership, then they don't have to guarantee on the loan. They're still subject to SBA 1919 forms and some of the other review, but they don't have to guarantee on the loan in that case. That's also something to keep in mind if you have investors lined up. Oftentimes I've come across situations where you have an investor that wants to be a part of the loan, invest the cash for equity injection, but they don't want to sign on anything. It's being mindful to keep them less than a 20% owner because they're not required to sign based off the SBA guidelines.
We've got a question here. How do you start the SBA process? So I think the issue here is I show up at the bank with, maybe I'm in business already, or maybe it's a startup. I mean, how do you decide whether to take a loan SBA, whether there's enough interest there on the part of the bank? Just how do loans get channeled into the SBA at your places?
Well, for us, we'll sit down with you and we'll go through what your project is, what your request is. But quite honestly, we're going to pretty much ask for the same packages across the board in any bank that I've been at. Again, bring in your returns, be prepared that you're going to be asked 3 years tax returns, profit and loss statements, balance sheets, debt schedules. A lot of people don't provide us with a debt schedule. We need to know what you're paying now, what the rates are, and at that point we'll go through it all and we'll let you know what your best options are, as far as here's a structure and here's something that we can put together. And yes, we need SBA, or it might come out to no, you don't need SBA. But that's really how you start is, pick up the phone, set an appointment with your banker or the bank, whoever you want to work with, um, and just have that discussion. But be prepared to bring in financials. Don't be surprised, and bring them in on, just as Nate said, everyone who's got 20% ownership. And that doesn't, and for us at consumers, that's a guideline for all of our commercial loans. If you're 20% owner of a business, you will have to sign on that loan. There's really not a non-recourse type loan. And I don't know, I haven't seen one in probably 20 years, unless it's, and that's not going to be an SBA deal. That
Practice finance space is usually where I've seen that kind of stuff.
Yeah, private equity guys. But really, that's where you need to start, is sitting down, bringing your financials, and be prepared. We're going to come back and probably ask for more information. There's always going to be questions that are going to be coming back and forth. So I would be prepared that way.
Yeah, and I saw a question pop in. It's something you're going to want to work with the banks on. Big thing is consumers. Huntington, we're preferred lenders, so we can make a bulk of our decisions in house. So you definitely want to come to the bank. If you have the contacts to someone like Sean and myself, you can go directly to us. That's a great place to start, because that's all we do. From there, Huntington is #1 SBA lender out there. Part of that's the education of our banking stream. We have folks, anywhere from the branch levels that are familiar with like SBA Express programs. They have business banking support that supports them. So when they see things pop up that might be more of a SBA appetite for the bank, they'll get me involved. Or simple things like keywords that they're trained to pick up on. When we have a client come in, I mentioned startup business, that's totally SBA. They mentioned acquisition, 9 times out of 10 that's going to be SBA. Business expansion, so on and so forth. And we'll look to get the right partners involved on that transaction to be able to help you out.
Hey, Nathan, did you want to say anything about Lift Local? Are you comfortable in talking about that?
Well, Lift Local is a program that we have through our branch channels. It's deals $150,000 or less. It's primarily driven to minority business owners, or how do I want to say it? Less lower income communities, rural and inner city type communities. One of the advantages of that program is it's a little bit more lenient on the credit scoring side. So that could be an opportunity for you. But bottom line, it's 150,000 or under. It's kind of like a microloan program.
Thanks. Tom, there was a question about EIDL loans here. You want to talk a little bit about EIDL and the pandemic?
Yeah, these EIDL loans, economic injury disaster loans, during the pandemic, we did like, I think, 400 billion of these things, where part of, everything was closed down during the pandemic there. So they gave these, try to help out small businesses providing these economic injury disaster loans. They are for 30 years, long there. EIDL loans are also, it could be for, current day, like flooding and, tornadoes or whatever, something like that, where a business is affected by, that disaster, and trying to help them economically, providing these loans to kind of get back up going. But we did do these loans during COVID, a ton of them. And like I said, they're still going on for 30 years. A lot of them might be still at, it's actually an SBA direct loan, where they got these funds here, and they're probably at a lot of banks. The money's parked there, or I don't know if Sean or Nathan, if you have customers that have these money in your bank from these idle loans, if they didn't use them up there. So
I would say most of your PPP money and idle money is gone at this point.
oh, it's gone. Okay, okay.
Deposits are very important right now to your local banks and everyone.
Right.
So, but yeah, I mean, we see a bunch of these idle loans. I will say that, if there's one out there, there is a process where we need to get a subordination from SBA if we're looking to do any kind of new financing, and we're taking a UCC filing, which is how we secure inventory, account receivables, basically all business assets that aren't titled. Uh, the SBA, when they did provide these, did go out and they did file UCC filings on all business assets of those businesses. And sometimes that can get a little tricky, to be honest, as far as getting the subordination. We have found that sometimes the SBA wants those paid off, especially if businesses doing expansion. We've ran into that where we've tried to get a subordination and SBA says, well, go ahead and pay us off on the idle loan that was given out during COVID.
Yes, they're still out there. 30 years long.
Yeah, great rate.
Right.
I have a question. Who makes the contact to the SBA? A participant is saying that I have clients who cannot get through to the SBA. Does the client contact the SBA or does the bank contact the SBA?
For the idle? For
No,
the subordination, or for which part of the process, I guess?
it does not say.
As
I
far
think
as
it's probably
contacting the SBA, I mean, if it's on a loan, your banker is going to work, the bank will work with the SBA for the guarantee. Again, Nathan and I are both preferred lenders. We have delegated authority. And in these days, basically with delegated authority, it's on us at this point. But we're the ones that will work directly with SBA to get the guarantee. If you're looking for information on a current idle loan, that will go through the SBA. You should be getting statements on that idle in some form, and you should be able to reach out to them to find out what your payment information, if that's where that's going.
Okay. So there's another, I'm sorry, go ahead.
I'm losing my train of thought here in regards to the EIDL loans. I think the COVID example is kind of anomaly when it comes to those loans going out there, just because the uniqueness of the situation, businesses closed, businesses not closed and whatnot. But, when you're looking at that best use of that, the area has to be declared a national disaster area. So I guess a good example is North Carolina when they got flooded and all those businesses and towns got flooded out. EIDL, that'd be a disaster area in my mind, can come in and help a business that was washed away between insurance and EIDL funds to get rebuilt. That's a real true good use of that program, I feel.
Yeah. And they'll have a certain amount set aside for those areas. Yeah.
Okay.
And if you get an idle, that is not through us. That's not through Nate
Nope.
nor myself. Idles are directly through the SBA. They set up their own portal for those. There's a lot of confusion a lot of times on that as well.
Vera, do you see anything else in the chat or Q&A?
Well, I've just completed Q&A and I'm going back to chat.
Okay. And Tom, you put your information in the chat, didn't you?
Let me do that here.
Did we answer, is there such an option as a micro? No, that was not the one. Oh, can we get the 504 loan for a real estate flip loan?
Not for investment real estate. So if it's to flip a house to resell it, even if it's commercial property you're trying to flip, it would not be eligible.
Okay.
It wouldn't be eligible for a regular SBA 7A either. The comment was made earlier, when you're looking at real estate, you need your business needs to occupy 51% or more for it to be considered.
Well, I think we've pretty much covered them. Mark, do you see something that we missed?
Well, sounds good to me. And I guess we'll wrap it up at this point. And, I'd like to thank Sean Ulick from Consumers National Bank and Nathan Sable from Huntington National Bank and Tom Sangrick from the United States Small Business Administration. And I'd like to thank you for your attendance. And so
Yeah,
I
Mark,
guess we're done.
I see we have a question in there about households.
What about it, Tom? Go ahead.
Oh, it says, how are households considered versus individual owners? I tend on owning a business, but I am married and filed tax jointly with my husband. How is my husband considered in the application?
So I can chime in on that. So the husband has 0% ownership. We are required to have a household personal financial statement, which would include both the husband and spouse on that. So we can have a good review of the assets and liabilities. That being said, that doesn't mean that that spouse is going to guarantee on the loan. We are required to have that household personal financial statement, but they're not necessarily required to guarantee on it.
Okay. There is a question here. It says, do you recommend prospective business owners engage with an outside organization like Guidant to help steward the loan application process with lenders? I don't know what Guidant is. Does anybody know what that is? Or
Yeah, Guidant Financial does Rob rollovers, and they can help with that process. I usually recommend my clients to go to services like SCORE or to small business development corporations, just because they're going to work with you directly. They're going to give you good counseling from professionals. You're going to be working on business plans and whatnot yourself. You're not hiring someone else to do that for you. Lender likes to see you have that done so you understand what you're putting together. And, there's benefits to going that way as well. Instead of spending a bunch of money to get a 500-page business plan together, we don't need to go that crazy.
No, I would agree with that. Everyone that works at SCORE, they've either been in this industry, or they might be retired CPAs, or they might be Mark Hansel, who was with the SBA and knows what the guidelines are and what we as bankers are looking for in an application, especially for a startup. And again, SCORE provides those services at no charge compared.
There's also a question that asks, which bank is best for seller finance? And I don't think we as SCORE mentors will recommend any particular institution, but we have some represented here on screen. So
Yeah, big thing is understanding the transaction and whatnot. It's not choosing a bank for seller finance per se. It's understanding the structure of the loan. And, when you're looking at guidance, I recommend, touching base with people like Sean and myself, even if you're uncertain and don't have everything together. We will help you, guide you through that process. I oftentimes refer my clients when they're not ready or have to put those business plans together and whatnot. I'll refer them over to SCORE and the SBDCs. So use us as a resource as well. Don't necessarily wait until everything's together. We can help you, guide you along the way.
Again, we're the ones providing the capital, investing in you and believing in you. So yeah, definitely start with your banker.
okay. There's a question that says, can the business itself be the personal guarantee if I don't have personal assets?
You're still 20% or more ownership. You're still going to be guaranteed on it.
Yeah, and the business itself is going to be the borrower on the loan.
Yeah.
So, basically it's going to come down to a credit decision in that scenario, understanding the asset pool. I've been able to get deals done before where people didn't have a house and things along those lines. Doesn't necessarily disqualify you. It's, depending on the strength of the business, strength of yourself individually, understanding your liquidity, all that type of stuff comes into play.
Okay, we have a couple more questions. I don't know where we're going to cut these off. This is 1201. Can a seller equity count as my equity?
5% of it.
Okay, 5%. And then the last question at 1204 with, what happens if you have a guarantee and then there's a default?
we can come out after you personally. I'll just be direct and honest with you. That's what your guarantee is there for. That allows us to attach to you as an individual, not just the business and its assets.
Yeah, it depends on the circumstances as well. We have a group that tries to help businesses that are struggling kind of restructure and get themselves back on their feet. You might be finding yourself in that group. If it was a simple missed payment and you can catch up on it easily, that's not a big deal when dealing with your bank. It's just when they start to become reoccurring, it's understanding what's going on, get you in the right hands of the bank that can try to help you out.
And one last question. We'll make this the last one. I have a quick question. What would be the expected amount of pages in a business plan for a startup?
Varies. I've seen them as short as 10 pages, and
Yeah.
I've seen the crazy 500-page ones.
I would say as a mentor, as many pages as it takes to succinctly tell your story and present the financials.
Yep.
Right. Management plans are key. Your vision is key. Having a breakdown of your project costs in there is huge. Having 3 years projections with your supporting assumptions is big. Especially
your background.
Yeah, exactly. Making sure you're a fit for operating that type of business. It's really going to come down to the type of transaction.
Okay, so again, thank you for your participation. Thank you, Mark and Tom and Sean and Nathan.
Mhm.
Yeah, we thank you very much. And this ends the presentation.
Thanks
You're
again,
welcome.
everyone.
Thank you.
Thank you.
Thank
Bye-bye.
Thanks, everybody.